Warm welcome everyone to today's edition of Money News. It's Wednesday, July the 16th. I am Bosin Amofaye. We're live to you from the FMDQ studios in Lagos.
And I am Melissa Enoch. Welcome everyone to the show.
West Bank for Investment and Development, or EBID, has released its 2025 edition of the West African Development Outlook report, which provides socio-economic indicators and forecasts for the sub-region. The report covers areas such as public debt and poverty. Let's take a bit from the summary of the report by Dr. Olabunju Ashimolewo, who is the Vice President of the Development Institution.
The ECOWAS GDP growth recorded a robust growth of 5.1% in 2024 from 3.9% the previous year. The outlook for 2025 and 2026 is very encouraging. The ECOWAS average inflation deteriorated 3.7% in 2024 to what it was at 20.8% in 2023. Inflation will taper in 2025 and next year. Fiscal balance weakened to minus 4.8% of GDP in 2024 from negative 4.6% in 2023. The debt to GDP ratio worsened to 60.7% in 2024, but is set to improve this year and also in 2026. The imminent withdrawal of Burkina Faso, Mali, and Niger from the community will adversely impact intra-regional trade, which has averaged at 8.6% over the last 3 years.
All right, another headline news this Wednesday. The Paris-based lender, Société Générale, says it has agreed to sell more than 58% of its stake in the Cameroon subsidiary to the government of the Central African Republic. Now, according to Reuters report on Tuesday, the Cameroonian government ownership of SocGen is now at about 83.7%. The value of the deal was not disclosed. The deal by the French banking giant is expected to close by the end of 2025 as part of SocGen's strategy to streamline its global operations. Melissa has more on Money Moves. Over to you, Melissa.
Yes, Bosin, thank you very much. A set of data released by JP Morgan Chase has revealed that no African country has a sovereign risk premium for the first time in 10 years. According to MoneyMeb report, it is the first time that no African state has a 4-digit yield spread following an era of widespread debt distress. The average yield on Mozambique's bond over U.S. Treasuries fell below 1.00 basis points this month, making it the last country in Africa to retreat from the threshold of debt distress. Analysts say fundamental improvements are seen across several countries in sub-Saharan Africa, aided by IMF programs, as well as some locally driven reform agenda. In Namibia, the country is getting ready to launch a new national payment system in September. The new system that is based on India's Unified Payments Interface follows a partnership between the Central Bank of Namibia and India, which was finalized during the recent visit of India's Prime Minister Narendra Modi to Namibia. Namibia's digital payments market is valued at $1.4 billion last year. The Southern African country now wants to modernize its financial infrastructure and reduce its reliance on electronic fund transfers, which stood at $68 billion in 2024. Egypt is set to launch a revived national commodity exchange that is focused on managing the country's imports and exports of key agricultural goods, the presidency announced on Tuesday. The new exchange comes as Egypt grapples with a sharp drop in wheat imports, down 27% in the first half of 2025, with the government's share falling over 57%. Trading on the new commodities exchange could include crops, processed foods, fertilizers, pesticides, and veterinary products. And finally, on news now, the Nairobi Securities Exchange reaches a new milestone today with the listing of the new Cetrix MSCI World Exchange Trade Fund, or ETF. The World Feeder ETF marks Kenya's first ever equity-based exchange-traded fund and only the second ETF on the local market. The fund listed today in Nairobi is managed by Cetrix, South Africa's leading provider of index tracking investment solutions. The new ETF will give Kenyan investors access to more than 1,300 large and mid-cap companies across 23 developed markets around the world. We say congratulations to both Satrix and the Nairobi Securities Exchange. And that's your news now on Money Moves. I am Melissa Enoch, and our full market coverage is next after the break. Stand.
Welcome back, everyone, to Morning News. Let's move into the markets for today. Let's track some of the trading here. The FMDQ ticker tape, of course, you can see behind me, just above there, the tickers running through for today's trading. The FMDQ exchange, what the numbers look like as far as the Nigerian debt instruments are concerned. But as always, let's start with the stock market and that big news of Satrix. MSCI ETF being listed today on the Nairobi Securities Exchange. The Nairobi stock market today advanced by 0.56%. That's the All-Share Index of the biggest exchange east of the continent, 157.60. Satrix will bring, of course, you heard from Melissa earlier, will make the Kenyan, make it possible for Kenyan investors to invest in the world portfolio of equities. That's what that ETF will bring to the table, and that's expanding and deepening the derivatives market across Africa. But let's start from the top of the graphics you're looking at right now. The Nigerian market continued that rally, 1.8% today. The market in Nigeria is playing catch me if you can. That's the equity side, 128,986.7 for the all-share index. In BRVM next door, 1.23%, and that's another big jump for the composite, coming back well above the 300 reading level. The Egyptian market pulled back some profit after that big jump we saw from Sunday to Monday when the Egyptian market closed. This market will be closing for the week on Thursday in Cairo, 1.36%, taking the EGX 30 higher, 33,473. In Morocco, one of the markets we track for you, 0.39% on the downside. The GSE flattish today. That's not the closing bell. The market was still trading at the time we put the data together about 14:09 GMT. The Semdex market in Mauritius was better by just 3 basis points, while the Zimbabwe stock market up by just less than 0.1%. Let me get out of equities and show you through the government bonds market using the 10-year paper for those 5 African countries, South Africa, Nigeria, Morocco, and Mauritius, largely flattish on their 10-year paper today, with the South African 10-year paper printing 9.885%, that's 0.025%, and the Kenyan 10-year paper down by roughly 1% at 13.35. That's the highly elevated, by the way, if you look at the single digit for South Africa, Morocco, and Mauritius 10-year paper. Let's move on and check through currencies for today. The South African rand, one of the convertible currencies in the continent with a very strong relationship with the US dollar, printing 0.23%, 1787. Slight deceleration from where we finished off on Tuesday, around 1792 to the US dollar. The Egyptian pound trading 0.03%. The CFA in West Africa, which is the French franc against the US dollar, now 564.76. The Kenyan shilling, 129.30. Staying below the 130 figure, while the Moroccan dinar was about 0.12%. Of course, the Nigerian currency, 1,528 against the dollar. The central bank intervening in the market, keeping the market up. Now, of course, you see more influence into Nigeria. That's 0.03% on the dollar. Of course, the dollar has also pushed up a push of its strength over the last few sessions. Let's move out of that and let's go into commodities now. Checking the data for today around 12:35 GMT. Brent was trading below 68. 68 was where we were yesterday. The market taking into account President Trump still firing tariff salvos at countries as his trading partners around the world, including China, which will, of course, including Russia, which, of course, will include some what you call sanctions. But, of course, we've got the EIA, the U.S. Energy Information Agency, talking this morning, giving data about the U.S. Reserves as far as crude oil is concerned, about 3.57 million barrels. So that pushed up oil prices down 1.04%. U.S. oil itself is around 68. That's 0.92%. If you go into gasoline, you're looking at a 0.63% down. Nat gas up about 356 by 1.14%. Take that into the metals market. Of course, you see strong dollar. That pushes some pressure, put pressure on the bullion, which is the yellow metal, which is gold. So that's in gold, 0.16%, and that means the dollar is softening a little bit, 3,342. And then copper coming in about 0.44% in the red. Platinum and aluminum finish a bit in different directions. You can see the numbers 0.6 to 0.36%, and iron ore trading around 96.50, about 0.27%. Down at about 12:40 GMT Nigerian time. And finally, in soft commodities, cocoa prices now below 8,000, and that's quite some news you need to watch, despite news coming out of the West African major cocoa exporters. There's a demand pressure right now slowing down because of the highly elevated prices of cocoa that we saw earlier in the year. So the grinding business in Europe is slightly down over the first quarter. Malaysia is also grinding less of cocoa because prices of chocolates go a lot higher, and that's a lot of issue. Then of course we get news out of Ghana, the second largest cocoa producer and exporter in the world, that there will be the heavy rainfalls may result in lower output for this year. A lot of issues here, putting pressure on cocoa prices below the 8,000 level. But let's move on. Coffee now back at about 305 US dollars. That's a massive 2.57% to the upside. What else am I watching? Cotton, palm oil, and sugar prices slow down around the noontime today in Nigeria. That's about 12:44 GMT. And those are some of the numbers we have for you into commodities as we go into the part of the current week. Thank you very much, and that's it today for our today's edition, Wednesday, the 16th of July, of Your Morning News. From Bosin and Ofai and the rest of the team here at the FMDQ trading floor. It's bye for now.